Living off dividends is a dream for many investors seeking financial independence. But how much do you actually need to invest to turn this dream into reality? Let's break down the basics and essential details you need to know. To begin, let's consider how to calculate the required investment. First, determine your desired annual income, which is the amount you need each year to cover your expenses. Then, research the average dividend yield of a well-diversified portfolio. Dividend yield is a percentage that represents the portion of a company's profits paid to shareholders. For example, a company with a 5% dividend yield will pay out $5 annually for every $100 of stock owned. Here's the formula you need. Minimum investment equals desired annual income / average dividend yield. For instance, if you want to generate $50,000 annually from dividends and your portfolio's average yield is 4%, you would need to invest at least $1 million to $150,000, $0.04 to meet your income goal. However, this calculation is simplified and doesn't account for factors like taxes, inflation, or potential fluctuations in dividend payouts. Dividends are taxable, and you'll need to adjust your income over time to keep up with inflation. Additionally, companies can cut or suspend dividends, impacting your income stream. Consider your risk tolerance as well. While dividend-paying stocks are generally more stable, they often offer lower overall returns compared to growth stocks. Diversification across different companies and sectors can help reduce risk. It's also important not to rely solely on dividends. A combination of dividends, growth stocks, and bonds can create a more balanced and resilient retirement portfolio. Consulting a financial advisor can help you develop a personalized investment plan to meet your specific goals. One crucial aspect to remember is the impact of taxes. Dividend income is taxed, and depending on your tax bracket, this can significantly affect your net income. Understanding the tax implications and planning accordingly can ensure you retain more of your earnings. Inflation is another critical factor. Over time, inflation erodes the purchasing power of money, which means you'll need to increase your dividend income to maintain your standard of living. This often requires selecting stocks with a history of increasing their dividends, providing a buffer against inflation. Fluctuations in dividend payouts are also a reality. Companies are not obligated to pay dividends, and during economic downturns, they might reduce or eliminate dividend payments. Building a diversified portfolio with companies across various sectors can mitigate this risk. Diversification not only reduces the risk of income loss from a single stock but also provides stability. By spreading investments across sectors such as technology, healthcare, and consumer goods, you can create a more robust and resilient portfolio. Reinvesting dividends is another powerful strategy. Using a dividend reinvestment plan DRIP, you can automatically reinvest your dividends to purchase more shares, compounding your returns over time and accelerating your portfolio's growth. Lastly, while dividend investing can be a valuable strategy, it's not the only way to generate income. Combining dividends with growth stocks and bonds can offer a more comprehensive approach to building wealth and achieving financial independence. By carefully considering these factors, you can determine if living off dividends is a feasible strategy for you. With a well-planned approach, it's possible to create a reliable income stream that supports your financial goals and lifestyle.